Welcome back to Arise. Exchange earnings season is beginning. Can investors cut through all the Washington mayhem to figure out how this will impact the markets? Tim Grisky is the Chief Investment Officer at Solaris Group, and he joins us now. Good afternoon, Tim.
Hi, Andrew.
So let me start with the debt ceiling here. As we get closer to that October 17th deadline, and let's say we don't have a resolution, can you walk us through what kind of pressure the markets are going to face?
Mike, part of that possibility of default is already in the market. I think it's a small amount currently, maybe a 10% probability. As we get closer and closer to that October 17th date, that probability of default, of course, rises. Now, the calculations are that we probably won't default right on the 17th, that it could actually be sometime in November before there's actually a default on debt. But regardless here, the market is going to become more and more concerned as we move towards that date. That puts more and more pressure, we think, on Congress and the White House to come to some type of resolution, some type of settlement and act. And certainly we're going to see Treasury and the Fed speaking much more vehemently about this issue and the risk that the politicians are putting not only our economy, but our view as a country globally that we are good for our debts.
Yeah, Tim, are you of the view, speaking of the economy, that a default or a potential default will in fact be sort of close to a doomsday scenario for the economy? Certainly, we're starting to feel that from a hype perspective. Are you the view that that could really happen?
We don't see a huge impact on the economy. Just the furloughing of employees here that we've seen recently isn't a huge impact on GDP. The estimates I've seen are about a 0.3% impact on GDP if it continues for the whole quarter. So we're not talking about a huge impact. And these employees, at least we believe, are going to get paid eventually anyway. So it's just more of a delay than anything. So the economic impact really isn't our concern. Our concern is more the possibility of a default.
Okay, let's turn to earnings now. It is corporate earnings that ultimately drive the stock market. Where do you see Q3 earnings coming in? We're starting to get reports, for example, that they're being lowered. The expectations are being lowered. Where do you fall in right now?
Definitely throughout the quarter, throughout the third quarter, estimates were brought down, street estimates were brought down, and that comes really from corporate management. Corporate management saying that that earnings expectations were too high. So that's already occurred, and I think what that's setting up is the probability that companies are going to come in with earnings in line or perhaps even slightly above expectations, those lowered expectations.
What do you think is driving the lower earnings? Is this the government that's driving these lower earnings, or?
Well, it's the overall economy, and certainly sequester is part of that. The lowering of federal expenditures, the mandated lowering of federal expenditures is part of that impact on the weak economy. But it is the overall economy. It's the very anemic recovery we've had, high unemployment, low participation rate. A lot of people just dropping out of the economy, dropping out of the labor force entirely.
Well, Tim,
that's the big issue.
And that brings up a really good point, because one of the complaints about the earlier economic numbers on earnings that we got was that we were seeing, earnings grow because of cuts, because of cutting expenses, not because of actual top line revenue growth. Do you think that we're going to start to see a turnaround there at all?
Well, everybody's saying eventually we're going to get revenue growth. We haven't seen much revenue growth in quite a while. Obviously, some companies do, but overall, we're not seeing revenues growing. But the expectation is that growth is out there, that it will start to occur. And we believe that slowly but surely it will. We're sure not seeing much revenue growth now, and we think that puts a cap on the market at some point here.
Okay, what kind of stocks are you looking at right now, Tim?
Well, we still like the consumer side, the consumer discretionary sector. Media companies like CBS, Time Warner, Disney, we think have a great position here. And then some retailers, Tractor Supply, which, of course, makes farm implements or sells them, as well as feed. They're sort of the Walmart of farming. That's also a great story.
Okay, Tim, thank you so much for your thoughts today. We'll have
Yeah.
you back on the show in a couple weeks to talk more about where we are headed with earnings and the debt ceiling. Tim Grisky is the Chief Investment Officer at Solaris Group. And you are watching Arise Exchange.